Welcome to Layn Credit University. I'm going to teach you how to actually be approved and start increasing your likelihood of being approved for personal loans. Sometimes this can be very hard for people, especially if you have no credit. Even harder if you have bad credit, or even fair credit or poor credit. Even for exceptional credit, it can be hard being approved for loans. There's a lot that's taken into consideration, from your debt to income ratio, to how much income you earn, to what you owe your debt, etc. How well you've been paying your accounts. There's a lot of different factors. Now, one thing you can actually consider is secured loans. What that is, I'll simply explain. I left a link below that goes deep detail. This is why you come to Layn Credit University. So always do your own due diligence. I'm not perfect, just like no one's perfect in my opinion, but I will do my best to share whatever I've learned that's worked for me and that's worked for other people I know. So I'm sharing the secrets that the wealthy don't really share with you, so I'm sharing with you. But this is how you do it. So a secured loan, yes, there's secured credit cards, but it's also secured loans. They work in the same fashion. It's a real loan. It's not a saving. It's not just a debit card. It's not fake. It's a real loan, but it works in a bit of reverse. It's a bit reverse engineering. That's what you're essentially doing. Is you're leaving a collateralized amount, basically think of it as a down payment, and you're extended a loan that you're paying back yourself. And at the end of the loan, you get your money back. Pretty cool. So what happens typically is like this. That might have confused you. If it did, it confuses a lot of people, so don't feel bad. It's cool. But let me walk you through it. And if you already know what this is, cool. Secured loan, you go to your bank institution, and even online bank institutions, and they can actually give you a loan, but the loan they give you is based on whatever typically the down payment amount that they require from you. So for example, just for the sake of examples, if you say request a $1,000 personal loan, right, but secured loan, so what happens is you basically they take $1,000 from you, and this is the cool thing about it. There's actually two popular programs. The most popular one is actually the first one. Let me actually reverse this back around. They'll ask you for a certain amount of money per month. So for instance, say it's $1,000, right? They might ask you, say, for something like $80 per month. You pay $80 per month to them, and they release back the money that you paid to them. But what's happening is they're reporting every time you make every monthly payment. That's one way. The other way is you give them an amount, or whatever, like I say, a down payment, and they basically extend you a loan, and they record it for you just like that, and they basically deduct it from that amount. That's not as popular, but there are some banks that have done that, where you pay them, say, an upfront amount, but that could be pretty costly for a lot of people. It's maybe you don't have $1,000 laying around, maybe you don't have $2,000, maybe you don't have $10,000 laying around. You basically pay the bank this, and they basically record it's in the account. It's basically in a certificate of deposit account, and it just deducts from that amount. That's not as popular, but it has the same functionality as the first option. The first option is basically where what a bank will do is they'll basically give you a loan amount, say for $1,000 or $2,000, whatever the amount is, or maybe you can even choose it. They break down what you need to pay them per month, and basically they don't actually pay you any money. They don't put any money in your account. What they do is they ask you to pay them, say, $80 per month, $100 per month, $200 per month, and at the end of the 12-month loan, 24-month loan, 36-month loan, whatever, however long it is, they pay you back the money at your last payment. Get what I'm saying? So for example, if it's, say, for a $2,000 loan, whatever, secured loan, what they'll do is they'll say pay, say, $150 per month, for example, or $140 or $120 per month, whatever the case is. And at the end of your 12th payment, or your last payment, or 24th payment, or 36th payment, on your last payment, wherever that is, they'll give you back the money. They'll usually direct deposit back into your account, or send you a check, or put into an account that you want them to put into, and the money gets back to you. Pretty cool way to do this with your own money. That's how you start reporting that you could be trusted to actually pay a loan back. So if you're not being approved for loans, or you're being approved for very low loans, or you're not being considered because maybe you have bad credit, good credit, or even poor credit, or exceptional credit, but you're just not being approved for higher limits, or you're not being approved at all for a loan, you're just declined outright, this is a great way to build your credit. So if you have no credit, you're building good credit history, because in a FICO, 35% of payment history is very important. And you're also at the same time showing you're responsible. And at the same time, the cool thing about this, people, is what you're also doing is, if you have bad credit, you're basically showing that you learned your ways, you learned how to, you took care of this, you changed your ways, and now they could trust you, because now you're putting good credit history and payment history on top of bad credit history, which is perfect. And if you already have good credit, now you're even compounding the good habits you already have, and you're reporting another account, and now you can start being improved and start inclining your chances and likelihood that banks can trust you, because they look at that's the whole reason they look at your credit report. They don't know you. So they can only judge you based on your payment history, if you paid this in fact, and if you have good payment history, if you don't miss a payment, because you can actually miss a payment for your secured loan, and that can be reported as a bad payment. So don't miss it. That's super hurtful. It's not even an actual loan that they paid you, but you defaulted on the secured loan. If that happens, call before that even happens and say just end it or whatever. Say, please, I'm in the product now. That's terrible. The point is of getting the secured loan is so that it reports good payment history. I left a link below directly from Experian that goes in detail what a secured loan is. And like I said, just paraphrase at its finest, it's basically a collateralized amount. So if you want $1,000 loan, you basically pay, say, whatever they want you to pay for that time frame. It's usually divided by whatever you want. So if it's $1,000, it's under 100. It's like probably $80 or $89 per month that you have to pay. If it's 2,000, it might be like say 160 or 150, 140. Whatever they have worked out, they basically divide it by whatever the term of your loan is. So if it's for 24 months, if it's 36 months, basically 2 years, 3 years. If it's 1 year, 12 months. If it's even 6 months, whatever the case, whatever the amount of the loan you want, they divide that, and then you pay per month. And then at the end of the loan, you get your money back. Consider doing this. Talk to your banker. Don't just believe anything I say. I am telling the truth. I'm sharing what I know and what I've learned, what's worked for me and for a lot of other people. And I just want to do my best to share free information so I can help change you guys' lives in a positive and financial manner. I love you guys. That's how you actually utilize a secured personal loan that can help build your credit if you have no credit, help make your credit better and increase your credit if you have bad credit or derogatory credit, or it takes you to the next level so you get to that next credit tier. Maybe you have good credit or exceptional credit, but you want to start being approved for bigger loans or larger loans, or you want to actually be at a different, you want to increase your different credit tier. That's how you do it. Follow me on Instagram, Conrad Layn. Like, subscribe, share. Love you guys. Conrad Layn out. Peace.